Welcome to BYDFi. I'm Elisa, your guide for this Bitcoin course video series. What are the 5 common mistakes made by 90% of Bitcoin traders? How do I even start trading? And how do I make sense of these confusing price charts that I see online? Well, stick around. Here on Bitcoin Courses, we will tackle these questions and more. If there's one question we get asked frequently here at BYDFi, it's how to trade Bitcoin. So, we've dedicated this episode of Bitcoin Courses to giving you a comprehensive lesson on Bitcoin trading. This session is going to be longer than usual, but trust me, it'll be worth your time. We're going to cover 4 major topics. Firstly, the definition of Bitcoin trading. Secondly, key terms you'll encounter when trading on exchanges. Thirdly, a brief introduction to reading price graphs. And finally, we will go over some common trading mistakes. Let's get started. What is Bitcoin trading, and how is it different from investing in Bitcoin? When people invest in Bitcoin, it generally means they're buying Bitcoin for the long term. They believe the price will rise over time, despite the short-term ups and downs. Typically, Bitcoin investors are motivated by the technology, ideology, or the team behind the currency. They tend to hodl Bitcoin for years. And by the way, hodl is a popular term in the Bitcoin community, originating from a 2013 typo of the word hold on the Bitcoin Talk forum. While investors buy and hold for the long haul, Bitcoin traders buy and sell Bitcoin in the short term, hoping to make a profit from price fluctuations. Traders see Bitcoin as a profit-making tool rather than a technological breakthrough. While many traders don't care about the ideology behind Bitcoin, others do, and some people invest and trade simultaneously. So why are so many people suddenly interested in trading Bitcoin? There are several reasons. First, Bitcoin is highly volatile, meaning you can potentially make significant profits if you can anticipate market movements correctly. Second, Bitcoin trading is open 24/7, unlike traditional markets like stocks and commodities, which have set opening and closing times. Finally, Bitcoin's unregulated nature means you can start trading relatively easily, without long verification processes. Different types of trading methods. Traders can employ various methods. Day trading involves making multiple trades in a single day to profit from short-term price movements. Day traders are often glued to their screens, and by the day's end, they usually close all their positions. Scalping is a popular day trading strategy. It seeks to make small, consistent profits on minor price movements, often executing dozens or even hundreds of trades in a day. On the other hand, swing trading capitalizes on price cycles, holding positions for days, weeks, or even months. Now that you know what trading is, how does one predict Bitcoin's price movements? The truth is, no one can predict the price with certainty. However, some traders use established patterns and methods to make educated guesses. 2 main strategies traders use are fundamental analysis and technical analysis. Fundamental analysis examines Bitcoin's overall value, looking at news, industry developments, and regulations. It focuses on the technology's long-term potential rather than short-term price movements. For example, if a country like China were to ban Bitcoin, fundamental analysis would predict a price drop. Technical analysis, on the other hand, studies historical market data, such as past price trends and trading volumes, to forecast future movements. It's based on the assumption that price patterns repeat over time. The best results often come from a combination of both methods. Understanding trading terms and concepts. Bitcoin exchanges are platforms where buyers and sellers are matched automatically. Unlike companies that sell you Bitcoin directly, like CoinMama, exchanges typically have lower fees. Marketplaces like Local Bitcoins facilitate direct communication between buyers and sellers. On an exchange, you'll come across the order book, which lists all buy, bids, and sell, asks, orders. When people talk about Bitcoin's price, they're usually referring to the last trade on a specific exchange. Terms like high and low indicate the highest and lowest prices in the last 24 hours, while volume measures the number of Bitcoins traded in that timeframe. A strong trend usually has a high volume, while weak trends have a low volume. Types of orders. Firstly, market orders are executed instantly at the best available price, though you might end up paying more than you intended. Secondly, limit orders only execute at your specified price, which means they might not be fully filled if no one is willing to trade at that price. Thirdly, stop-loss orders help minimize losses by selling your Bitcoin if the price drops to a certain level. You may also encounter terms like maker fees and taker fees. If you create a new order that can't be immediately matched, you're a market maker and pay lower fees. If your order is fulfilled instantly, you're a taker and pay higher fees. Reading price graphs often use Japanese candlesticks, a method from the 1600s used in rice trading. Each candlestick represents the open, high, low, and close prices of a specific timeframe. A green candle indicates a price increase, while a red one shows a decrease. In a bull market, most candles are green, while a bear market has mostly red candles. Support and resistance levels are price points where Bitcoin struggles to move higher, while support levels prevent it from dropping lower. These levels are often psychological barriers set at round numbers, like $10,000, because many traders set to buy or sell orders at these points. Common mistakes to avoid. Firstly, don't risk more than you can afford to lose. Trading is risky, and investing too much can cloud your judgment. Secondly, have a clear action plan. Set profit goals and stop-loss orders before trading. Thirdly, beware of emotional trading. Fear can cause premature selling, and greed can lead to impulsive buying. Stick to your plan. Lastly, learn from every trade, win or lose. Trading requires time and effort to master. To be successful in trading, you must be willing to invest in your education. If you're hoping to make quick, easy money, trading may not be for you. If you have questions, feel free to leave them in the comments below. If you enjoy the content, please hit the like button and subscribe for updates on new episodes. Thank you for joining me on the Bitcoin courses of BYDFi. I'm Elisa, and I will see you soon.